Welcome to the Daily Globe. Please subscribe and hit the bell icon for more breaking updates. A storm is gathering over the American automotive industry, casting a long shadow over factories, workers, and communities across the nation. The signs are everywhere: uncertainty, tension, and a sense that something big is about to change. This looming crisis threatens to reshape the nation's economy and send shockwaves worldwide, affecting not just the auto sector, but the very fabric of global commerce. Today, October 8, 2025, the sector stands at a crossroads, caught in a fierce trade dispute that has escalated rapidly over recent months, leaving little time for preparation or negotiation. At the center are urgent warnings from Toyota and Honda. New U.S. tariffs on imported vehicles and parts could put 840,000 American jobs at risk. These aren't just numbers. They represent families, livelihoods, and entire communities that depend on the auto industry's stability. This isn't just a corporate spat, it's a direct threat to workers and the stability of a key U.S. industry. The stakes are high, and the consequences could ripple far beyond the factory gates. The American auto sector is a vast, interconnected web, stretching from massive Midwest assembly plants to small suppliers and dealerships in every corner of the country. Each link in this chain is vital, and disruption in one part can quickly spread throughout the system. Tariffs threaten to unravel decades of global supply chains, forcing tough choices that could mean factory closures, layoffs, and the loss of hard-won expertise. The impact is personal. Assembly line workers, engineers, and designers who have dedicated their lives to this industry now face an uncertain future. Sales associates, mechanics, and support staff are left wondering if their jobs will survive the coming months, as anxiety grows in break rooms and boardrooms alike. The U.S. doesn't operate in a vacuum. Tariffs risk retaliation from Japan and the EU, threatening to upend long-standing trade relationships and alliances. If tensions escalate, the world could be plunged into a global trade war, with consequences that reach far beyond the auto industry. Such conflict would disrupt commerce, destabilize markets, and stifle growth worldwide, putting millions of jobs and billions in economic activity at risk. As the world watches, the decisions made now will determine if the industry recovers, adapts, or faces a prolonged period of turmoil and decline. The threat is real. Assembly lines could grind to a halt, plants may be abandoned, and the lights that once symbolized American ingenuity could flicker out. The well-being of a global industry and millions of livelihoods hangs in the balance as the world waits to see what the future holds for the American auto sector. To truly grasp today's crisis in the auto industry, we need to look back at decades of international collaboration and competition in car manufacturing. The story begins in the late 20th century, when automakers realized that working across borders could drive down costs and boost innovation. Especially among the US, Japan, and Mexico, partnerships flourished, with each country bringing unique strengths, engineering, labor, and logistics to the table. Trade deals like NAFTA, and later USMCA, created a tightly woven system where auto parts could cross borders multiple times before a single car rolled off the assembly line. This interconnectedness made North America a global powerhouse in car production, but this efficiency also bred vulnerability. When one link in the chain faltered, the entire system felt the shock. Now that vulnerability is exposed as tariffs return to the forefront as a U.S. economic weapon, threatening the very foundation of this cross-border cooperation. In 2024, the Biden administration's review of Section 232 opened the door to tariffs as high as 25% on imported vehicles. The stated goal: to protect domestic manufacturing and secure American jobs in a rapidly changing global market. The United Auto Workers Union, fresh from hard-fought contract wins, seized the moment. They pushed for tariffs on Mexican imports, arguing that lower wages abroad undercut U.S. jobs and threatened the livelihoods of American workers. Automakers who built their business models on free trade and seamless supply chains now face a new reality. Borders that once symbolized opportunity have become barriers, slowing production and raising costs. Decades-old ties between companies and countries are now strained by protectionist policies, forcing executives to rethink strategies and alliances. The very system designed for efficiency and growth has become a battleground, setting the stage for today's economic turbulence and uncertainty in the global auto industry. The year 2025 has brought a relentless barrage of policy changes, sending shockwaves through the global auto industry. Every month seems to bring a new headline, a new regulation, or a fresh round of uncertainty for automakers and suppliers alike. In May, the Trump administration stunned the sector by imposing sweeping 25% tariffs on $460 billion worth of vehicle and parts imports. This move jolted the industry, disrupting established supply chains and forcing companies to rethink sourcing strategies overnight. Just 2 months later, a US-Japan trade deal set a 15% tariff on Japanese auto imports. While lower than the initial threat, it still represents a major burden for giants like Toyota and Honda, who now face tough choices about pricing, production, and market share in America. By August, the tariff net widened further, expanding to $240 billion in steel and aluminum. These core materials are the backbone of car manufacturing, and the new costs are squeezing automakers already investing heavily in electrification and next-generation technologies. Amid growing panic and industry backlash, the administration floated a possible tariff relief package for U.S.-assembled vehicles. This proposal could extend and expand import offsets, but details remain unclear, leaving companies in limbo. This rapid-fire policy whiplash, tariff hikes followed by hints of relief, has left automakers and suppliers unable to plan for the future. Long-term investments are on hold, and strategic decisions are clouded by doubt. Automakers are now forced into a high-stakes guessing game, with profits, jobs, and even entire business models hanging in the balance. Workers on the factory floor and executives in boardrooms alike are feeling the pressure. The industry finds itself caught between reactive government policies and mounting economic uncertainty. Stock prices swing wildly, and production lines slow as companies wait for clarity. The result? An entire sector teetering on a knife's edge, unsure of what the next month or even the next week will bring. The financial toll of tariffs is now undeniable. Toyota forecasts a 31% drop in first-quarter profits for 2025, its weakest in over 2 years, while Honda warns of a 36% plunge and a possible 59% annual decline. Both companies' U.S. sales remain strong, but profits are squeezed by tariffs and currency pressures. Honda is scaling back electric vehicle investments, pivoting to hybrids to weather the storm. Despite robust demand, rising costs may soon force automakers to raise prices or cut jobs. These shifts signal more than temporary pain. They threaten the industry's long-term competitiveness and innovation. The financial reports from Toyota and Honda are a clear warning. The tariff crisis is inflicting real, immediate damage. America's own giants, Ford and GM, are deeply entangled in the tariff crisis. Both oppose tariffs on Mexican vehicles, warning they would disrupt North American supply chains and harm U.S. industry. GM estimates up to $5 billion in tariff costs for 2025. Ford projects $3 billion, huge sums that threaten profits and future investment. News of possible tariff relief sparked hope, with stock prices rising on the announcement. Yet, Ford and GM are caught between union demands for protection and their reliance on global supply chains. Their dilemma mirrors the broader crisis balancing nationalist policies with the realities of global manufacturing. Billions, and the future of American automaking, are at stake. The most critical cost of this crisis is jobs. The Alliance for Automotive Innovation warns that broad tariffs could endanger 840,000 U.S. jobs across assembly lines, suppliers, and dealerships. Toyota alone employs 136,000 Americans, but its operations support hundreds of thousands more. Tariffs act as a tax, forcing automakers to cut costs, often through layoffs, hiring freezes, or even plant closures. The domino effect is brutal. A slowdown at one plant ripples through the entire supply chain. For workers and small businesses, the fear is real. Livelihoods are on the line. The figure isn't just a statistic, it represents families and communities facing an uncertain future. The human cost of the trade war is mounting. The stakes for American workers have never been higher. The tariff crisis hits consumers first. Higher prices on showroom floors as automakers pass on increased costs. For many families, the dream of car ownership slips further out of reach. Price hikes chill demand, triggering production cuts and layoffs, a vicious cycle that weakens the economy. The crisis also disrupts global supply chains, where parts cross borders multiple times before final assembly. Tariffs at each crossing add cost and complexity, forcing companies to scramble for new suppliers or reconfigure logistics. Billions once destined for innovation are now spent on tariffs and supply chain fixes. The result: less investment in electric vehicles, autonomous tech, and safety features. The ripple effect threatens not just today's jobs but America's future as an automotive leader. The industry's long-term health and competitiveness are at risk. Experts and politicians are weighing in as the crisis deepens. Analyst Kristen Zichek warns that tariffs may protect some jobs short-term but risk devastating the entire industry. Christopher Richter of CLSA highlights the immediate financial harm to Japanese automakers, confirming the crisis is real, not theoretical. Politically, figures like Senator Bernie Moreno support tariff relief to protect U.S. manufacturing and jobs. Leaders are walking a tightrope, balancing tough trade stances with the need to avoid economic disaster. The debate is fierce, with no easy answers, just mounting pressure for urgent solutions. The U.S. auto industry stands at a crossroads, with 840,000 jobs and global leadership at stake. Tariffs meant to protect American workers now threaten to destroy jobs, raise prices, and fracture supply chains. Ford and GM's struggle to balance union demands and global realities reflects the sector's impossible choices. The future hinges on decisions made in Washington. Will relief come, or is deeper crisis ahead? The outcome will shape whether factories stay open, workers keep their jobs, and America remains a hub for automotive innovation. For consumers and workers alike, the stakes are real and immediate. Understanding these complex trade policies is vital as the industry's fate, and the economy's, hangs in the balance. The road ahead is uncertain, demanding vigilance and clear-eyed choices from all.